Welcome to another week in review. We're going to be looking at the trading week of August 4th, 2025. We're already in August, and that is absolutely wild to me. We've got not much on the table for data coming up this week, which is kind of nice after the absolute cluster that it was last week. We'll go through this quickly. So Monday, we have no major data. I'll talk about earnings after this too. Tuesday, 10 a.m., we have ISM services coming out. Wednesday, we have 12:45 dailies speaking, and then we have the 10-year bond auction at 1 p.m. So don't think daily is going to say anything that's really, going to move the market. The bond auction could definitely have, especially now, could have some volatility around it. Thursday, we have jobless claims as we normally do at 8:30. We have Bostic speaking at 10 a.m., and then we have the 30-year auction at 1 p.m. Again, 1 p.m. the 30-year auction, we could see some movement and volatility around that. And then Friday we have no major data, which is nice. We have some earnings this week, nothing crazy. Tuesday after the close, we have AMD, SMCI, and then Snap as far as ones to watch. Wednesday morning we have Uber, Shopify, and we have McDonald's. All of those will be pretty interesting. After the close on Wednesday, not really much the remainder of the week, thankfully. So really just Tuesday, I think. We do have Palantir if you care about Palantir as well on Monday, but Tuesday after the close, we have AMD and SMCI. And then aside from that, nothing really major that's going to move the market, but just something to pay attention to, I guess, if you're interested or if you're going to play any of these earnings. So as far as what happened last week, I won't spend too much time on this because I think it's pretty self-explanatory for the most part. So Thursday we had Monday to Wednesday we had consolidation, we had balance for the most part, no real directional decision, and then Thursday we had an attempt at liquidation, and then we had obviously Microsoft and Meta earnings come out, blow it out of the water. Big gap up on Thursday, and then immediate sell, basically vaped the entire move. And then Friday we got the continuation move, which makes sense. We had a bearish imbalance get put in, and then we had continuation Friday down, and we continued to liquidate at the open. Big gap down, big regular trading hours gap down. And then we had continuation right off rip, huge amount of volume into the open sell. But then for the majority of the day, we just basically consolidated and balanced the remainder of the day with two-way tape. Actually, quite a nice trading environment we had on Friday if you're a day trader intraday. So going forward, the question obviously is, do we see directional continuation from this liquidation move that we have from the highs? Do we see a period of consolidation? Do we see the snap right back up? The move itself so far off the highs is about 3.5% over the course of 2 days. Obviously, this is the full extended session, but that's quite significant. That's quite stretched quite quickly. As far as for me, since I am a day trader, I'm primarily trading these rotations intraday. The direction of the market doesn't really matter to me, and I think day traders are getting very caught up in, trying to be right or trying to pick a major top in the market, and trying to make correct calls all the time. It doesn't really matter. From a pure day trading perspective, paying attention to what's happening on larger time frames will be extremely helpful. Where the market can go and where it's coming from can tell you a lot about where you could potentially start placing trades. But as far as the bigger picture, I don't care what direction this market goes. It really doesn't matter. Volatility and ranges to me are key, and having some idea of directional edge can help me make better informed decisions about what's a more likely scenario to play out. What side of the tape could I potentially be positioned on from an intraday basis that could give me a bigger rotation and could give me easier places to manage risk and put stop gaps in place where I'm very, very clearly wrong. And that's all I really care about, and that's the entire point of the videos that I make on a weekly basis. Is I try and give some context around general market movement, general market activity, which direction, are we going on higher time frames? Can that dictate where we go on smaller time frames? Can that help dictate, where you or I might want to, look for positioning? to take advantage of those intraday rotations and activities, and just trying to block out everything else about the trying to pick the exact top of the market or the exact bottom of the market. If you're a day trader, especially intraday, futures positions, your 5 minute to 3 hour hold is not gonna matter much about the bigger picture of this market. So just getting that out of the way, because I think there's a lot of, anytime we have a correction, especially a fast correction, a really fast liquidations down, it always comes out that we have people that come out of the woodwork that have been trying to call tops for weeks on end unsuccessfully, getting eviscerated inputs, trying to basically top every single time we put in what looks to be a potential swing high, and then it gets very loud, it gets very noisy. It's very detrimental, especially to newer traders, to really follow some of that religiously. And newer traders, I find, and I fell into this trap as well, where I would be looking for those big fast opportunities down, when in reality trying to time that, especially if you're using a vehicle like options, extremely difficult, not worth your time. So what we're going to focus on, and what I'm focusing on this week, is where do we go from here in the short term, and where can I manage in the short term. So the big thing that I'm going to pay attention to on Monday and for this week is the fact that we have a very fast, large, long liquidation down. We have two B profiles if you want to look at it from that perspective. So we have long liquidations, then we have consolidations into the lows. So the weekly, the daily is one time framing down, so the daily has shifted to down. The weekly is going into balance, and then the monthly, we have July's low very, very close down here. This type of day that we had on Friday, we didn't close into the lows. We closed back inside IB. It was a fairly normal day. But this type of imbalance can correct itself in the sense of this can provide a bearish imbalance and can give continuation to basically fill out this profile on a normal range of standard deviation, on a normal standard deviation curve, basically, is the way that I look at this. Generally speaking, when I see really fast moves like this, I'm looking for some sort of mean reversion. Big emotional liquidation sells like this can still get some continuation. So what I'm primarily interested in is if we do see continuation on Monday, looking around last week's low, which is also prior multi-week balance lows down here at 6240s. I want to see if we have a fast drop lower down into the 6220 into July's low area to 6200 area, and if we see any buyers start to enter the market down here. So if we see us start to fill this, basically correct this profile and fill this out on the tail end here, do we have any opportunities down here for long trades into 6220s to 6200s into the prior all-time highs? This is the prior all-time high on the cash index, so this will also be a fairly significant level to watch, this 20 to 6200 area, to see if we have a puke down here that gets bought. I think what I'm looking for this week, I'm open to both sides of this for sure. But I think the big thing is I'm going to watch down here 6200 to 6220s to 6200 to see if we have any buyers enter the fold, and if we can start potentially positioning for some bigger long trades to get some mean reversion back up and start backfilling this profile that we put in last week. The other place we can look for as well, the pivot that I'm going to use early on, is 6270s. And there's a myriad of reasons for this. It also has to do with this moving average that I have right here, this indicator that I have right here. But the big thing for me is that if we're accepting above 6270s, especially early, or if we come down, we potentially puke, we rebid last week's low in the 40s. If we can get back above 6270s, I'm only really looking on the long side, and I'm going to look to see if we can start punching back up into 6300s and into potentially filling this gap at 6360s. So my interest primarily right here is not looking for more of a directional short. I think the bulk of that has played out in the short term, and I think what we're more likely to see is consolidation down into this range and some reversion back up and potentially get back up into the gaps into 6300s to 6360s in this range up here. So be looking for active buying into 6220s to 6200s. The big line in the sand that we've talked about forever on these videos is 6160s, which is also coinciding with the 50-day simple moving average. So if we go to higher time frames, the daily and the weekly, this basically is the line in the sand for me for buyers in the short term. So I do, at least at this point in time, the market was extremely extended, and we talked about this in the last video as well. The market was extremely extended with poor structure to the upside in the daily time frame. This liquidation move is fast, but it also makes sense. It also makes sense to correct some of those lows. It makes sense to potentially flush out some of those weak hands and potentially come and back test this massive area that we have right here at 6160s on ES. 6160 down into about 6100, call it, and see if we have interest in back testing this and see if we can open potentially some long positions here for a continuation leg higher to 6600s, which is the ultimate end target of this for me, at least. And again, from a day trading perspective, these are targets I'd look at for potentially, opening a larger trade on a swing basis. But from a day trading perspective, obviously, I'm looking for those smaller rotations. But if we start getting back in and digging into 6160s to 6100s, and we see, a decent, really good low, really good volume get put in, and no acceptance back down into this range, I'm going to look to see if I can add some longs to get some larger rotations back up to 6600s ultimately. That's where I'm looking, at least. So big thing for me is that these types of days can have continuation. We can see this punch lower, and it wouldn't be uncommon to see that. Stats actually lean to this going lower before it goes higher. But with that being said, if we can fill this out, basically fill out down 6220s to 6200s and find a decent low in this range to look on the long side, or if we can find acceptance above 6270s, again, I'm going to stay on the long side and look for some reversion back up and get back up into 6300s to 6360s. I'm less interested in trying to fish for a continuation short down in this range. I think if I'm going to be looking for continuation shorts, I want to see exhaustion basically up into 6370s. So I want to see a lot of effort try and break through. I want to see a lot of volume get jammed up into 6360s, and I want to see that fail. And that could set up a really nice lower high here if we're going to see continuation down. But for me, trying to find continuation shorts after 3.5% move in 2 days, this very often is going to snap back up, and we're going to start to fill in this range that we had. And you're going to be better served, in my opinion, to look for potential short opportunities up here, long opportunities down here for reversion back up, potential short opportunities up here. If we start accepting back above that gap down, if we start, filling in and closing higher time frames above 6360s, then this sell is likely going to be negated, in my opinion, and we are very likely to come back up, test the meat of last week's distribution, and probably take out the highs here. A short-term target up here would be 6480s still, but I think 6360 as far as a pivot for sellers you can use quite easily. If we backfill this gap, this huge RTH gap that we left, if we backfill this gap and we find no acceptance above this, then we could set up a nice lower high, look for continuation shorts down. If we start closing higher time frames above, we start closing intraday periods above 6360s, it's very likely, in my opinion, that we come back and at least test last week's POC, and we could potentially take out the highs. The NASDAQ is going to be very, very similar. And again, you can see this moving average here as well, which is pretty critical in the way that I'm looking at this right now. So July's low is down into 580s. So it's going to be the same thing. If we see a bit of a fill out of this profile down, so if we take out last week's low and we start finding a bit down into 650s, we rebid last week's low, then again, I'm going to look for that rotation trade back up. Or if we're accepting above 22,900s, again, I want to see the rotation trade take place back up, backfill some of this profile, and start testing the gap, start testing that weekly low at July 21st weekly low. And again, the line in the sand, I think the simple one to use is if we backfill this RTH gap that we have, if we have a nice lower high get put in here, we get a lot of volume jammed up into 23,300s, then we can use this as risk for continuation short trades down. But I'm not interested really personally in trying to find continuation shorts down in here after such a fast move down, a fast extended move down. These generally will have some sort of reversion. They'll snap back even if we go lower first. In my opinion, at least, we're more likely to start to fill out this range first than a straight continuation move down. That would be uncommon to see a move that far that fast without any type of retrace, without any type of people trying to lift this market as well as shorts covering, because you have to also consider too, with the speed at which this is going to come down, you had a lot of shorts cover into close. And again, as we get further down, if we do start to dig in down here, you'll have more shorts start to cover, and even just a cover rally could take us easily back up into this range. So we'll try and fish for a lower high, potentially up into a gap fill, potential gap fill reversal for a lower high down. And again, if we get back up above 23,300s, then the likelihood of, these ETH all-time highs standing, I think, is limited, and we're probably going to just, retrace this entire move back up. There could be a catalyst around this. It's unlikely it's this week with the amount of with the data that we do have, but that's essentially what I'm looking for. So more of a reversionary view, in my opinion, this week. We could complete this imbalance lower, we could balance this out lower, fix this bearish imbalance lower, and we could look for a decent low into 220s to 6200s, and then the big spot for me is 6160s, and I think this is probably going to be worth some risk looking for a long trade down here, in my opinion. If we start puking below 6160s, this market has much bigger problems, and we're looking at probably a much larger correction in the short term, which I don't think is as likely just yet, but anything's possible. So hopefully that helps. A bit of a longer video, trying to explain, I guess, some context around at least how I'm looking at the market, and things that I try and pay attention to, things that I try and block out. I don't know if any of that helps. I don't know if these videos help. I hope they do. I make them for myself. I put them out there, because I think maybe talking this stuff through can help other people. It certainly helps me when I look at my weekly notes, just going back through this and watching this video myself. If you find it helps, leave a like, comment on the video if you want, subscribe to the channel. It would mean a lot. Thanks for your time.